Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, and we just packed a ton of information, catalyst events into just 5 trading days. This was a super action-packed week. We're going to talk about all of it. I'm off camera today, but we've got a heavy show here of information. We're going to look at some price charts as well. We're going to look at our own trading system, some trade ideas, and all the good stuff. So stick around. Let's get into it here. Our sponsor of the show, Investors Business Daily. Check out some of those links we have in the description of the show. Get yourself some discounts. IBD Digital, IBD Market Surge. 2 subscriptions I use every single day. Check it out in the description of the show once you're done watching this video. We're going to start with the Fed because this was Fed week after all, and we did get that rate cut that we were largely expecting, 25 basis point cut, but it was not as dovish as I think the market would have hoped for. This was sort of a hawkish cut where Jerome Powell was basically very adamant that the future cuts are not guaranteed. They should not be baked in. And the market certainly had a little bit to say about that with some volatility on the session. Of course, the week largely was up and we did get our cut. But when we look at the odds of December now, take a look at, let's see if I can pull out my pen here. Take a look at the odds 1 week ago, right in here where I'm drawing. 92% chance priced in last week that in the December meeting, we would be getting another cut, essentially 2 cuts from a week ago. But now we can see that the market is a lot more uncertain about that. We are now much more split on whether or not December is in fact going to be a cut. Jerome Powell seems to be, really kind of flying blind and waiting for data. And of course, the government's shut down. So it will be, as always, a little bit of tension here. I think the pendulum always kind of swings back and forth here. That's what keeps the market grinding. That's what keeps everybody on edge. And so we have a slight wrinkle there in terms of Fed policy. Now, on the much more positive side, we did get a meeting from President Trump and Chinese leader Xi, much more than I expected, right? I mean, I think there were odds that, perhaps a meeting just gets called off or doesn't even happen. And in fact, we did seem to get some agreements here that China is going to delay some of those restrictions on rare earth. Trump, I believe, lowered tariffs across the board. I think we're getting soybean purchases. So there's actually, some encouraging action here. I don't think everything is finalized. It's mostly kind of delay and wait and see and kind of prolonging this ultimate resolution. But all in all, I would say it was pretty constructive from that point of view. Now, in terms of earnings, we had obviously some of the big heavyweights, most of the big heavyweights reporting this week. We're going to look at all of those stocks and those charts a little bit later in the video, but Alphabet really just standing out here, really kind of separating itself now from some of the other Mag 7 all-time highs. Great quarter. Cloud growth is strong, pulled back a little bit towards the end of the week, but generally speaking, market really rewarding Alphabet. Meta, not so much, right? I think everybody, of course, is getting hung up on just the amount of CapEx going into some of these companies, but obviously in particular Meta as they sort of doubled their long-term debt. But really, when you look at the numbers in the balance sheet, and again, I'm not one to really comb through balance sheets and fundamentals. I mean, it still feels relatively small given the cash on hand and just the size of the company and the credit rating. They are aggressive, right? And Zuck has sort of, made these big, bold bets and pivoted the company just like it was a small startup. So could be an opportunity there. I don't have any skin in the game for Meta myself, but we're going to look at all those charts in just a little bit. Let's look at the numbers here. So you can see, again, Q's up were the biggest this week. So big tech earnings. Qs are up 2%. Dow is up 1%. SPY almost 1%. But look at this. Look at the Russell 2000. So this is quite the spread here if you look between the Qs and the Russell 2000. And that's something of note. Here's the S&P 500. Again, kind of a seesaw pattern here, but generally speaking, it was constructive. It was up. We're still hanging above 6,800. We are a little bit off of highs, but generally speaking, this trend is very much intact. Now, here's the curious thing, and this is what should have at least a little bit of attention given, is we basically had markets up, vol up, and look at the volatility index of the VIX this week. I mean, it's basically up and to the right. Now we, obviously, started from a pretty low base, and last week we talked about the fact that the market, and when I say market in this case the VIX, essentially round tripped the entire kind of fear impulse leg up on the escalation of China tariffs, and we got all the way back down to sub 16, and now we're starting to bounce again. So this is something we want to pay attention to. I mean, hedging is certainly the market doing some of the fear for you, but we want to just pay attention to market up, volatility up. Here's another thing that's going up, and it's the dollar index. The dollar index was sliding and sliding for all of this year, but it's been on a march higher now. It's notable, right? This is a little bit more than just that sort of a dead cat bounce. I mean, longer term, the downtrend is still very much intact here for the US dollar, but intermediate term, it's starting to reclaim some levels and starting to, or continuing to push higher. 10-year Treasury yield. This is also very notable because remember we were, kind of ringing the bell, celebrating that we were briefly below 4%. We're back above 4% and meaningfully so. We're going out in the week here at 4.10, and we are now kind of back above and, with some urgency here, this big round psychological 4% level. Of course, you can thank the Fed here out this week on throwing some cold water on this, on the rate cutting path. And so the market, I think, is kind of figuring out where fair value is. But this is something we want to pay attention to because, again, you're also just seeing this, with the Russell 2000 performance and some of the other stocks out there, real estate specifically, mortgage refi rates, which I was in the middle of. I was briefly, on the phone hating my timing on refinancing, as I was one of the poor souls to purchase a home about 2.5 years ago, while things were pretty high, and I was very temporarily upset with locking in, a refi, and now that rates are moving back up, I'm much more quiet and happy that I got that in. So we'll see, but mortgage rates, obviously, just a big unlock for the economy and spending and taking pressure off the consumer. Now, if we take a look at sectors here, you can see XLK up 2.5%. That was the big standout, of course, and you could say that breadth was pretty narrow this week. It was largely large cap tech and heavyweight stocks. Real estate here was the hardest hit, 4.10%. Materials breaking down notably, and staples down 3.5%. We've only got two sectors in our smart trend filter sort of view on markets here that are in confirmed uptrends. That tells you that things are thin out there. It's tech and it's industrials. This is working. They've been working. But when we look at kind of this neutral, choppy state, this is how we lump together when there's just two-way trading. There's some positive remarks to say, there's some negative, and it's kind of just a choppy in between. That's where lots of things are hanging out right now. And then, of course, we've got staples, materials, and real estate in confirmed downtrends. This is our smart trend filter indicator available for TC2000 and TradingView. Now, another thing that's notable this week, which is not what you want to see, is this spike here, right? And finally, I have gotten these charts normalized here. So the scale is identical on both of these charts. And what you're essentially noticing now is that the number of stocks hitting 52-week lows is starting to outpace the number of stocks hitting 52-week highs. So that's a negative here for the market breadth. And it's, we haven't seen sustained stocks hitting lows over highs, and now we're starting to see a few consecutive days. This is something to take note of. You've got volatility rising while markets rise. You've got thinner leadership here, and so we've got a little bit of turbulence or some two-way thinking to consider here. Percentage of stocks above a 20 SMA. I mean, look, it's not an It's not an overbought market, that's for sure, right? This is just more signs basically saying that leadership is narrow right now. And again, it doesn't mean we have to come crashing down. It just means that things are thinning out, and the big heavy cap stocks, which has been semiconductors, technology, largely Mag 7. I mean, this has been a theme that we've dealt with now in this market regime for quite some time. So it's not like it's brand new here. If we take a look at real estate, again, this is a hell of a tight range going back years, right? And it's very tight, but its volume picked up this week for sure. And we came right back down very swiftly to some recent lows. So real estate looks like it's on the verge of breaking out. This could be a nice little fake out, shake out, and then a rip higher. So let's keep the other scenario in mind. But certainly real estate seems to be waking up. And materials, like we talked about earlier, we were in a confirmed downtrend in some of the models that we run on it. And again, you can see some of that volume pick up, and one of the worst performing now just in terms of recent rotation for sectors. Bitcoin also just kind of thrashing around, not doing a whole lot. Again, like we've talked about, 110 is still kind of the bigger level, and 115 these are kind of my two big key off points here. If we're above 110, okay, I can like Bitcoin. I can tactically like Bitcoin. I can want to have maybe one foot in the door. If we start falling below 110, I just get a lot less excited. But really, this is going to be the unlock here for momentum and for some type of push back up and test of the top end of the range. But Bitcoin here, I think it's just been frustrating a lot of holders, as it's just done pretty much nothing. But vol is picking up. I mean, look at the size of these ranges here. Bitcoin vol is back. And so once again, we should expect perhaps some movement coming here outside of this big range. We'll have to just wait and see on which direction that happens. So we're going to take a pause here. We're going to look at our trading systems, and then we're going to look at some charts. So stick around. All right, so here is the three trading systems, three models that we're running here. This is our long-term model, Galahad, and again, you can see it's pretty much staying invested here. Here are the underlying tickers that our trend model is invested in right now. So the largest position, pretty much still gold at this point, but still a good amount of exposure to NASDAQ 100 as well, and then kind of a diverse core holdings across a handful of other assets. It's had a really strong year. Next week, I should have October performance logged, but for now, it remains pretty much invested in a very cool, calm, collected, trend following, longer term kind of trend following, all weather portfolio like Galahad. Is exactly what you really needed this year, not to agonize over a lot of the stress. So this has served us well. Our short-term model here is pretty light on the exposure. I know there's a handful of signals coming on board next week for Monday, so we do have some new trade setups, but it's been very light here this past 5 days, and so it's got some long exposure on, nothing on the short side, and we'll see how that shakes out next week. And then for our Quant Rockets model here, I'm going to highlight 3 stocks on my favorites list. And full disclosure, I do own all 3, so I'm very much talking my book. Tesla, we've talked about this. I've highlighted it multiple times. I just think it's, again, just a good story narrative stock. It's in a sweet spot. There's catalysts. There's just a narrative being, really kind of cultivated here as we think about the next wave of AI, robotics, and self-driving cars, and the momentum, and the fact that it went nowhere for a while, and most people hate Elon. Like, everything just seems to be lining up nicely for a long trade in Tesla. We've been in it for 59 days. I remain in it, and the setup here still looks pretty nice. So that's the one I will reiterate again. CRDO, this is one that I picked up this week. This is a new buy that our Quant Rockets model, our momentum model, signaled for us earlier this week. So we got involved at 156. It had a very strong finish to the week here, and it's breaking out to new highs. So CRDO, I like it. You've got to chase it a little bit now, but this was a signal 4 days ago. And LITE, this is another one that signaled for us earlier this week. It's one that I got involved in, a lot less extended at this point, up 4%. But these are some of the momentum picks. These are some, really just some of the plays in this, AI thematic semi plays, but also energy. Quant Rockets has really been nailing a lot of these stocks, and I've been putting a lot of development hours behind this platform, and I think there's some cool features coming out. And as a little bit of a hint, if you're still watching in the middle of the video here, we will likely be running a Black Friday sale next week. I'm sorry, not next week, next month. And if you want to trial the trading systems to see if any of these are going to be a good fit for you, because they are very different tempos, then I would encourage you to jump on our trial membership, test drive them now, figure out if they're helpful or not, and then you can take advantage of perhaps some Black Friday sales next week. So let's get into some charts now. I got TC 2000 open here, and we're going to just run through a few different tickers, and we'll be on our merry way. So S&P 500, like we sort of looked at before, again, had the nice push up, pulled back a little bit into the end of the year, into the end of the week, still in a solid uptrend, got some gaps it could come back and fill. I think as a momentum kind of level, or nice area to hold, you're really looking at around 673 now. You basically want to stay above this October, middle of October highs. Maybe you fill this gap, maybe you undercut it, scare some people again. But generally speaking, I think if you're above 670, 673 or so, you got to like the action there. And for the Qs, again, you got these gaps over here that you could fill, but really I'd be looking at, again, keeping above this mid-October breakout level, which is around, call it 610, right? Give it some wiggle room. If we're closing above 610, I mean, you just have to like the market, even though breadth is weak, right? Narrow leadership. It's still a kind of a chase into year end potential that you have to just keep on your mindset. And the market, as thin as it is, I mean, there's definitely, there's work to be done finding the stocks that are moving, because there are still plenty of stocks that are moving. For instance, again, our Quant Rockets basket, not to just continue to shill this product, but it's had an amazing year picking out the stocks that are working. And there's been just a strong cohort of, 40, 50 different names that continue to see rotation and strong trends. But if you're stuck, looking in some other areas and perhaps just missing some of the hotter stocks, then this has been a very challenging market. Russell 2000, again, like we talked about, had a very poor week. Technically, very sideways here, but not breaking down, at least not yet, right? I mean, if you start really losing some of this, some of this channel here, and I hate drawing diagonal lines. I just you don't usually see me draw lines like this, but it's been a slow, sluggish slope, right? It's been a slow, sluggish grind. That's what this whole year has been for the Russell 2000. It's been 2 steps forward, 1 step back. It hasn't been just a clear shot race up. And maybe, the Russell 2000, we can argue, is a terrible index to truly look at. But generally speaking here, I would say if we're holding above 240, if we're not breaking down here, then again, give some credit to the overall trend that the market finds itself in, which is higher, right? So that's really the big story. We talked about VIX, right? VIX ratcheting up a little bit, still below 20, above the lows though recently. So that's kind of what we're looking at. IEF, this is the 10-year Treasury bond. Again, you could see moving down sharply this week. If we take a look at gold, it tried to hammer out this week. It was still down. So this is our second week down for GLD. This was after, basically 10 weeks up in a row. And it looks like it's trying to find some lows, find a bottom here, and try and put in a higher low. We'll see. It doesn't look all that settled and sort of resolute, but it's trying to hang in there. Again, could it still swing lower? Sure. But I'm still generally optimistic on it. Our longer term model's still bullish on gold. What else? Mag 7. Let's go just take a look at those, because I think it was interesting for them. And we'll see if we can find any interesting charts here. So we'll just pick them one by one. This was Microsoft here, and you can see that this action doesn't look all that exciting. Kind of looks like a double top. I mean, it violently rejected 555 the first time in August, violently rejected it again here in October. So again, it doesn't have to mean that we need to break trend and start rolling over, but when you look at the weekly chart here, that's a pretty good rejection point. Makes you feel like you may just need to spend some more time going sideways between 495 and 525 or so before we get some type of resolution. Microsoft, though, down 7% in 4 days. That's a pretty good little short-term sell-off. NVIDIA certainly is what's holding up this market. One of the better, brighter spots, of course. It's breaking out. It's clearly above its old highs from January or really last year, and it's acting well, right? This is one of the bright spots, over 5 trillion. This is an off cycle kind of earnings reporter, so this isn't yet. You probably have a few more weeks before you start to see NVIDIA. I just don't really see too much of a new trade on it. I believe this is in, let's see if I can find it. Believe this is in our model here for Quant Rockets as well. I mean, it certainly has been. Let's see. Yeah, we've got coverage on it. So we've traded in and out of this, but it looks like our last buy signal was on September 12th at 177. So right in here. Right in here is basically when we jumped back in long, and so far so good. Google has really kind of, set itself apart now and just in a strong trend. Great earnings report, seems to be firing on all cylinders. This one was left for dead at the start of the AI race, and now it is really playing some catch up. I like it. I don't own any, but it's working. And Apple now has slingshot, had earnings this week. We didn't talk about it at the top of the show. Stock didn't move much at all, made briefly new highs, then kind of sold off. So that's what we're looking at there. Tesla, we already talked about, bottom right. I like it. I own it. I think it's going higher. Meta is the interesting one because this clearly is the heaviest hit now. Again, mostly on just how aggressive they're spending. People maybe concerned that they don't have a cloud business like Amazon and Google and Microsoft, but they're still competing with them and spending so much. So it'll be interesting. I think, it would potentially shake up to be an opportunity, but I'm not jumping in here. I'm not that excited about it in the short term. I think if we get back into the lower to mid 500s, that would start to get me interested. And now, of course, Amazon breaking out to new all-time highs, had a great report. Tough, kind of sell the day's session today. Look for it to maybe kind of come back, test the gap, maybe refill the gap. But Amazon, generally speaking, has got the attention of wanting to be a good AI beneficiary, to benefit from AI. And 1 year performance now. Take a look at this. You've got Tesla and Google, which is breaking apart now. This is 1 year performance for the Mag 7. And so you can see that's kind of the spread there. They were underdogs coming into it, and now they're starting to get the rotation and some of the spotlight. So that's it. I think, look, I think it can be a challenging market. I think less is more. You're either on that slower pace trend following, kind of just waiting for a shoe to really drop, and you're trying to sit back and not touch your portfolio too much, or you're out there and you're searching through some of the semis, some of the individual just benefit factors of either AI via energy or infrastructure and CapEx expenditure. SMH here we didn't talk about, but again is towards highs, and again it's hard to bet against a market when you have the big heavyweights that are in uptrends, right? Narrow leadership, but it doesn't mean things have to break down now. We just got through a ton of data. Let's see how the market handles the first week in November. Let's see if there's any big trend changes tomorrow or next week. But we're going to start to cruise very quickly into holiday time. Things will slow down, and then you'll get a nice, kind of year-end sort of drift if none of these other negative catalysts seem to manifest. So that's all I got. Long episode, lots to get through. Hope everybody's doing well out there. Again, check out the trial offer we have on our website. I am spending the most development hours I have building out primarily Quant Rockets, but all of our trading systems, and really trying to create more of a helpful member experience. And so that's my goal right now. And going into the new year, I've got some interesting plans for it. And so check out those trials, maybe some discounts next month. That's all for me. Have a great weekend. Hope to see you back here next week.